Great. So here we are, Sean. Last week of June. 3 months ago, it was the last week of March. Literally the week before the world sort of went a bit crazy with Trump's announcements. It's been an incredible quarter, roller coaster of a ride. With I can't believe how much has actually happened in this 3 month period. So just give us a quick reflection on those 3 months, if you would.
I would summarize it as a period of volatility and uncertainty. Exactly like you said, the second day into the quarter, April 2nd, Trump announced his Liberation Day tariff updates, which frightened the investment markets. We saw a huge global reset, reallocation away from previously strong US into more safe havens like the UK equity market, like European equity markets, probably from a perspective of political stability, but also from a valuation perspective. And we also saw assets like gold, which have performed very strongly amidst all this uncertainty and the geopolitical tensions in the Middle East. Gold's currently trading at $3,300.
It's not just all been about Trump. There's been those Middle East tensions that you mentioned as well, and Trump's been dropping bombs. With oil as well. How do you see volatility going forward? Does this continue for the next 3 months, or is there maybe some respite from what's happened?
Yeah, I think the initial scare from the Liberation Day tariffs, I think the market has got used to the existing in uncertainty and volatility, but also the nature of Trump's negotiating style. So his brinkmanship, the back and forth, the extending deadlines and brokering deals. So it seems to be that's Trump's style. So the market has actually got a bit more used to that. So we're not seeing some of the volatile single day moves that we were previously. We are coming up to July 9th, which is Europe's chance to make a deal. And we expect, they will come through with something, or they'll be allowed, a long period to negotiate as well.
Okay, so with a bit more calm, there's this much sort of talked about pivot away from the US towards Europe. Do we see a move back to the US now? Where does it leave the US market? It's such an important driver of global markets. What's your view now for the US?
Yeah, interestingly, the falls that we're seeing in the S&P and the Nasdaq that occurred in April, they've actually fully recovered from that point. The S&P 500 is currently sitting at a new all-time high. What's interesting is I think some of the confidence that was shaken from Trump was reassured and removed, and then things like overriding themes like AI. The US is the leader. Stocks like Nvidia was performed 45% during the quarter, reclaiming its seat as the world's most valuable company. I think things like that have continued to show that US exceptionalism hasn't gone entirely away, but I think that European equity markets and UK equity markets are still offering a safe haven and stability away from some of this volatility and uncertainty. And the defense spending stimulus from Europe especially has contributed, to some of that the growth that's there as well.
Okay, so for investors, there's a little bit more calm. If they look at their portfolios, think about, positioning, maybe what happens to inflation, interest rates, what would you be saying to investors around their portfolio looking forward for 3 to 6 months?
Volatility will still be present, but I don't think it will exist in the same way it did early April. I think that was quite a shock to the market. I would suggest that equity allocations will still remain fully invested, but perhaps we'll see a slight underweight to the US in favor of Europe and the UK, just while they continue to navigate this unsteady environment with Trump still, on his trade deal warpath and the uncertainties that come with that. And I also think that an allocation to alternative assets, that is a healthy diversifier. And that's the great thing about a portfolio is it's diversified. It's not just entirely invested in US equities, for example.
Great. So more calm for investors, but keep those portfolios well diversified and bring on the next three months.
Yeah, exactly. Yeah.